So despite the weak industrial production data, but because inflation is expected to be high, are you then saying that when it comes to rate hike decisions, RBI is still going to hike it? And if yes, by how much are you expecting the rate hike to come in?
Interest rate policies will definitely be based on the inflation numbers. So I think that's why the inflation numbers are critical. And we're not quite sure as to which particular index the RBI would be looking at, whether it would be the CPI or the WPI. And depending upon where these numbers are, whether they seem to be in the upward trajectory or whether they appear to be stable, that's when we can think of any kind of a decision being taken on the repo rate. So I think today, even in monetary policy, we need to distinguish between the repo rate and the MSF rate. The repo rate seems to be the one which is aligned more to inflation, and MSF rate more on account of what's happening in terms of liquidity or what's happening in terms of the exchange rate.
So on the repo rate front, what would be your outlook for the rest of this financial year then?
We are still hoping that on account of a fairly good harvest and the fact that inflation numbers, that is the statistical inflation numbers, may be moving some way downwards, there is still a reason for us to believe that the RBI could probably be rolling back on the repo rate during the course of the rest of the year. But that will be more towards December and more towards March. So we are still looking at a 50 basis points cut in the repo rate, and probably the MSF being rolled back to 100 basis points higher than the repo rate, which was what it initially was conceived to be.